Please review the disclosures. Nothing written, expressed, or said here should be looked at as investment advice or an admonition to buy, sell, or trade any security or financial instrument. The Lund Loop is for informational purposes only. Hey everybody, welcome to the Daily Update for Monday, October 27th, 2025. Happy Monday. I am back. I am back in my office. I feel so much better being back here in the sense of it was so hard to do the Daily Update when I was on my crappy laptop. As you know, I was out in Vegas. I'll tell you about that in a minute. So if you're not in the Discord yet, what are you doing? Why are you not in the Discord? If you are a paid subscriber, you're not getting the full value out of your Lund Loop subscription unless you're in the Discord. So get in there. By the way, if you have a comped or a gift subscription, meaning if I comped you or if someone gave you a gift, there's a little workaround for getting into the Discord. It's no big deal. Just hit me up, shoot me an email, and I'll get you in there. If you're not a paid subscriber, what is wrong with you? Seriously, like what is wrong with you? Become a paid subscriber, $300 for the whole year, the best ROI you can get, and you'll get an email, you get right into the Discord, you get the whole back catalog of deconstructing a trade, meditations on markets, the daily watch list, the full daily update, just so much stuff. There's too much stuff, seriously, for $300. All right, so like I said, I was out in Las Vegas, and I got to tell you, man, this Mount Charleston is probably one of my favorite places on earth. You know, you go to a place and it's like that tuning fork. You know, you just go, something just, it gets in sync with your vibes, man. You know your vibes. Something about Mount Charleston. I think it's the dichotomy that here you've got Vegas, where it's 110 in the summer, and then you can go up to Mount Charleston, where it's a beautiful mountain. I did some hiking up there. I touched snow, which is fantastic because it helps me get into the fall spirit. And look at that good-looking guy there. That's me at the top. Had to stop a few times. You know, I'm coming from sea level and going up to almost 9,000 feet. So anyway, I was out in Vegas to attend my buddy Joe Fahmy's birthday. A lot of you guys know Joe. And he was kind enough to ask me to sit in on a podcast episode. And this episode included one of Joe's friends, hopefully a new friend of mine, Phil's, I think Sosan, his last name, professional musician. And I shouldn't say surprisingly, because why wouldn't he be a sophisticated investor and trader as well? I mean, but you just think like rock star and sophisticated trader investor, and he's both. So we had a great conversation. The first half was about trading and investing, and the second half was about music, where I just basically asked a question and went like this. You know, so that's coming out soon, and I think you'll enjoy it. All right, how about this market? My goodness, let's take a look at the intraday action. So I pounded the table on this again and again and again, and I'll just keep pounding it until my knuckles are bloody. When you get a move like this, and we see that spread between the intraday moving averages, here's the 5 EMA, here's the 9 EMA, and there's the 20. The wider that spread, the more aggressive the move. So in this case, it's aggressive buying right out of the chute. And we saw this on Friday too. Look at that. Same sort of thing. You see that big spread here. And then the second thing that we look for when we see this big spread at the open is how does the 20 EMA come into play? Because oftentimes it becomes the limiter, either on the top or the bottom. So on the bottom, it's support if we're seeing a lot of buying. On the top, it's resistance. So this was Friday, where it pretty much provided support all the way till the end of the day. And then look at this. Oh, it's almost like magic. Again, there's the 20. We're not even getting anywhere near it. We just barely go below it, but we keep it as support. It's support again. And then what did we do at the end of the day? Here, let's go take a look. What did we do? We did the, wait for it, ramp. We just ramped. Why is that GIF so small? Anyway, great day in the market. Saw the same thing in basically all the other indexes. Everything closed pretty near the highs of the day. You can see it also in the futures. I can't remember if I don't think there's anything significant reporting after hours. So, great look at the futures. All right, so I said, I named this daily update, what do you mean you didn't buy ASST? I always have to remember to say the other S, because we've obviously been on AST a lot last couple months. Now this is ASST. ASST is a meme stock that got hot on Friday. People have been talking about all over FinTwit. People have been talking about it the in the Discord, and I think what's interesting about ASST, I'm just going to call ASST. How about that? I'll go ASST. That would be easier. Is it's so emblematic of the type of market we are in right now. And this is something that I talked about on the podcast, but I'll give you a little preview. So sometimes you're in a market where the fundamental people and the value people go, yeah, this works. Fundamentally, the market's moving how it should, or from a value standpoint. Then you get to that market where they start freaking out. And they're like, this market is overvalued. The fundamentals do not support this market. And that's where guys like us, like the people that are watching, guys and gals like us, technical traders, we love that because we don't care. Like, we don't care about the fundamentals. If we have the fundamentals going in our direction, I'm going to take these glasses off right now. If we have the fundamentals going in our direction and they correspond with our technicals, I love that. But if they diverge, I'll go with the technicals. And so we can trade this market from a technical standpoint, regardless of whether we think it's overvalued or not. This is something we saw recently in Oklo, stock with no revenue, no product, no projections for product or revenue, and going to the moon. And we played it perfectly based upon technicals. Okay. Then you go into this sort of market where even the technical guys go, this is kind of crazy. Like, where you get these parabolic moves where every fiber of your body, your technical body, says, I need to be getting out of this stock, just while these crazy meme people are saying, I'm getting into the stock. And what's sometimes frustrating is you'll bank 25%, 30%, 40%, and then the stock goes up another 150%. So we're kind of in that market right now. And ASST is a perfect example of that, because, and I had this debate with someone on a Spaces today. If we look at this chart, and let's do the old replay thing here. Now let's see what it looked like here. All right, so there's nothing in this chart that would make a technician want to buy it. There's no way you can rationalize this. It is being pounded by all the moving averages. It can't even get anywhere near the 8. It looks like a broken meme stock, and then it has this little uptick in volume, which, again, I don't think there's anything there that would have justified anyone that's a real technician to say, let's buy it. And then we got a influencer on Friday who opened his Yap, and what happened? We got a pop, and the stock went up. Okay, again, no real technical reason to buy this, but that doesn't mean this stock can't go rocket to the moon. So it was up 28% on Friday. Here's what it did today. It was up 50%. At one point, I think it was up 65%. This is the type of market we're in. And it can be a little frustrating for folks like us who want to use risk parameters and look at something like this and go, there's no way anyone should be in this. But let me tell you how you do something like this, all right? You can play this thing as long as you understand the game that you're playing. This is a momentum game. This is like a reverse of whack-a-mole. As things are coming into different plays, liquidity, right? Liquidity. These are liquidity plays. So I took a flyer on this. I bought some pre-market at like 148. I bought it a couple times today. I bought it here. I bought it here. I think I bought it here. Sold a little bit here. Still have some. I know it's a coin flip. If I lose it all, if it went to zero tomorrow, I wouldn't care. But this is the type of market we're in, where something like this, you could wake up and it could be at 5 or it could be 10 tomorrow. So the way I look at it is, let's go to, and I know I'm going a little long here in the preamble, but I think this is important. So here's how I look at it. If you play technically correct from a risk management standpoint, and you make money on stocks, your portfolio, it's okay to take some money, to peel a little bit off and say, I'm going to take a flyer, right? So for example, Bros. We talked about Bros numerous times, but one of the places I highlighted was here when it hit this double bottom. And I said it's a good risk reward. And Bros has gone on to make 25% since then. I have a pretty decent position in Bros, which I've been talking about in the Discord. So I'm okay saying, hey, I'll take a little bit of that Bros profit and take a flyer on ASST. I think that's how you do it. I don't think you can do it where you just take 25% of your net worth or you make some ridiculous play on this. It's hard to do these things with options because the premium, the IV is so big. But I just thought it was crazy that everywhere I looked today and over the weekend, it was just, this name was, it was everywhere. Everywhere I looked, Everywhere I looked, the name was everywhere. That's really good. That's good, Brian. Work on that. Everywhere I looked, people were talking about this stock. So anyway, all right, let's go. All right, let's look at, I mean, come on. Let's look at the indexes. We'll go through the index. I mean, look, this is where I would normally cut the free people off. But what am I going to say that they don't already know here, right? There's nothing to put behind the paywall today. I said, we had this breakout here, and I said, I don't think I'd be chasing things here, right? Here's where you'd want to buy. You don't want to chase here. Why? Because we might get a pullback that would shake you out. So if you buy at the top here and you get shaken out here and you have to sell, you might miss some upside. So, this was a spot to be buying. This was a spot to hold or maybe trim a little bit. Buy back here, buy here. And the one thing I've been saying this whole time is there is nothing technically wrong with this chart. There sure as hell was something technically wrong with this chart, but then we spent a week rebuilding. Remember everyone thought that we were going into Black Monday? And I said, don't be so sure. Yes, we could go into Black Monday, but that doesn't mean we're going to go to Black Monday. Let's see what the price action tells us. So we built up here. We broke the short-term downtrend. We recaptured the 8, had a little consolidation, a pullback. We saw buyers step in and keep it above the 8. We pushed above. And I said, I said on Friday when I was hiking, I said, gun to my head, we're going higher. We gapped up, on Thursday. We gapped up on Friday, and boy, did we gap up today. I mean, what a move. And of course, this is all based upon the China thing being resolved. Remember here, China's acting bad. We don't like China. China resolved. Okay? This is the Trump market. So again, nothing technically wrong with this market. We had increased volume. Are we going to rest at some point? Yes. Are we going to revisit the 8? Yes, we have to at some point. Are we getting a little ahead of our skis? Probably. Would I have been buying today other than stupid meme stocks like ASST? No. This would have been a trim day for sure. The question is, how do we get to the 8? Do we get there in one day? That would be bad. Do we get there over the course of a few weeks? Sure, that would be okay. The angle of how we get there, like if we get there like this, that's one way. If we get there like this and we just correct over time instead of through price, that's even better. So again, this is where you'd be buying maybe here. These are trim days, I think, unless you're talking about your core positions. And we've got earnings, which is always so dicey. Same thing here on the Qs. I mean, what else can I say? We're at all-time highs, increased volume. Same thing on the Dow. The only thing that's not participating yet, and hopefully will, is IWM. And you would think, sometimes I'm hesitant when we see moves like this out of the 4 indexes and we can't get IWM to move and to break out to new highs. Sometimes I think, well, when these pull back, IWM is going to tank big time. But it could be the opposite. It could be that we get a little bit of rotation in IWM. So it's just about being in the right stocks. So, all right. So now what we're going to do is we're going to wait for it. We're going to go through all the macros to see if they confirm what we're seeing in the indexes. And then we'll look at the watch list, which a lot of things have just been register ringing, ATM ringing. Is that a register ring? That's really not a register ringing action. I think this is a holdover from Vegas. This is a slot machine because I'm old and I remember when you used to do this with a slot machine. Now it's just this, right? A lot of register ringing on the watch list, but we have some additions. Actually, some things that I think have good potential to move in the next 1 to 3 days. So, all right, let's get into it.